Hey guys, welcome to my channel, and this is a free Forex course. Whether you are a beginner, intermediate or advanced, I expect that in the next coming weeks and months, what you're going to learn from me, it's going to help you in your trading journey. And I do believe what I'm going to share with you for free, you can be a consistently profitable trader. It has that, the amount of knowledge and skills that I'm going to be sharing with you, you will be able to be a consistently profitable trader. So this is the first lesson, so there's a few things I have to say. Number one, I don't give financial advice. Number two, I don't do signals. And number three, there are a lot of scammers out there, a lot of fake Forex gurus out there, a lot of fakes that will take your money and sell you absolute crap. And I want to tell you that you should listen to me and you should follow me because I am a real trader and I've proven it. Why should you listen to me? There's millions of YouTube videos out there, but why should you stop and listen to mine and watch mine? It's simply because I've proven that I'm a real trader. If you followed me on TikTok, you would see, and you should vouch for me. If you followed me, please do comment below and vouch for me. I've displayed my skills. I've been so transparent to the point where I've shown you my MT4, to the point where I even done my analysis the day before and posted that, and then on the day of, posted my results, and I've even shown my Forex fund. I've logged in, I've shown you guys, screen shared it. And what more can I do to show you? And I've passed it in front of you guys. I bought the challenge. I showed you guys the receipt. I showed you guys every single trade. I passed the first phase on the first day, on Monday. Then I had to wait a whole week. Then on the next Monday was the start of phase 2. I was in some drawdown. And then the next day, Tuesday, which is today, I ended up passing, made 10% and I passed. So I've shown you guys the receipts and I will continue to do so. I'm happy to do so. If you come across a Forex trader who wants to teach you and he or she doesn't have the level of transparency that I do, run away. They're just trying to take your money. I'm not even selling you a course. You know, there's nothing wrong with selling courses, by the way. Nothing wrong with it at all. As long as you can prove that you are a consistently profitable trader. And I also want to say, look, don't quit your job. Even after you've learned everything, I believe that you can still have a job and still balance trading. I've proven it even with today's trade when I made 10%. I jumped in the trade at around 6:30 and I was out at 8 a.m. And what I could have done in the meantime, I could have got ready and gone to work. So if I can do it, you can do it too. Anyone can do it. So don't quit your day job. You know, trading, you know, there's risks to it. So I care for you guys. I don't want you guys to, you know, put yourselves in a compromising situation. So there's that. A few more things I want to say is technical analysis is actually pretty easy. That's the easy part in my opinion. And the hard part is not psychology. People say psychology. That word has been thrown around. What people are meant to say is the hard part is discipline and patience. Those are the hard things about trading, being patient and being disciplined. Because if you don't have those two things, then you're just gambling. And we're not gamblers, guys. We are traders. So this is the way this is going to work, okay? I'm going to teach you a bunch of different concepts and then we're going to tie it all together, which will give you a trading plan. So the first concept is very, very simple and straightforward. And my whole trading strategy is all about logic. I'm going to always go back to logic. Does this make sense? Is this logical? And the first piece of logic is you buy low and you sell high. And this is the thing. You can be an advanced. I've seen advanced traders. They know all these things. They studied ICT and they know all of these things, these PD arrays and, you know, fair value gaps, order blocks, and they know all of this crazy stuff, advanced stuff, but they don't have logic. They don't realize that, you know, are we actually in a discount or are we in a, you know, in a premium? I mean, I know PD arrays, that's what it means, but do you actually know what it means? You know, you might know the terminology, but do you know if we're in a discount? Do you know if we're in a premium? And how do you know that? Let's get straight into it. Look, in a 5 minute, I'm on the euro dollar, in the 5 minute, clearly for the last few hours, we've been bearish. You know, there's lower highs, lower lows. But if you look out on the monthly time frame, even on the monthly time frame, we had a massive bearish move from June 21, or Jan 21 to be fair. And it's only since September, October that we've generally been bullish. So overall, in the last few months, nearly for the last year, we have actually been bullish with euro dollar. So you want to look at this thing in multi-time frames. And when you look at things in multi-time frames, it gives you a better idea. It builds a better story, and the logic is there. Does it make sense to go short? Does it make sense to go long? So again, if we look at the weekly, it says overall, you can see that there's higher highs and higher lows. But let's go back to the monthly. On the monthly, you can see that here was our recent high. We've taken that high. And now we're experiencing a pullback. Before we, take out that high, there needs to be a pullback. So currently, we're having that pullback. We're experiencing that pullback. And in the coming lessons, we will know whether or not we are about to have a turnaround. We will know when there's a pullback. We will know when there's a turnaround. Or I don't like using the word no, but because we never know. It's most likely. If there's going to be a pullback, this is the chance there's most likely going to be a pullback. This is the place most likely going to be a turnaround. And again, in the next coming months, we will piece everything together. When to know these, when these things most likely will happen. But again, going back to the weekly, that's that pullback that you saw in the monthly time frame, that one candlestick. This is that pullback. And you can see, just eyeballing it, when you look at this leg right here, this weekly leg, we are around the equilibrium, the midway point. So anywhere from here to below is a good place to buy. And anywhere from here and above is a good place to sell, generally. And this is the thing, we don't look at it that way. Even advanced traders, they forget about this thing. And there's other, obviously, confluences to look at. If you don't know what confluence means, it means other sort of things to take into consideration. There's a fair value gap here, and this is something I'm going to teach properly later on, which gives you an indication that we are going to go bearish. But if we go to the daily time frame, in this leg, you can see we have been bullish overall, but for the last, month or so, over a month now, 2 months, we've been bearish. We've been bearish, but people think that let's just take a short and hold it till kingdom come. No, that's not true, because in this leg, as you can see, we are bullish, and this has just been a pullback to grab more money, to get money out of, to buy at a discounted price for us to go long. And there's a couple of points where we could be turning around, and this would be the section here, because again, we've got that fair value gap. Price was going short here. It was bearish, and all of a sudden we had this impulsive move, which means there's money around this area. Something's going on around here. This is just using logic. So we'll see what happens. And either two things, you're right or you're wrong. So when you have this strategy and you have theory, you act on it. And then let's take a look at the 4-hour time frame. Generally, we are going bearish. So you obviously want to look for shorts, but you want to look for shorts when you're at the best discounted price. Why would you look for shorts, down here when we're sort of, it's in a discount range for you to go long? You want to look for shorts around here. So it's just using common sense. And I'm going to show you how I look at the price and do structure. And it's really, really simple, using the highs and lows. So let's look at this low. And then we've been going bullish, bullish, bullish. And then here you can see that this broke this high. There was a pullback and this broke this high. So therefore, this is the low. And then again, same thing here, where there's been a pullback and then this broke the high. So now we know on the monthly time frame we are bullish, and this was the low, the recent low, and we are in between this time, these 2 points here, this low and this high. And now let's go to the weekly, and now you can see, looking at the weekly, that we're pretty much at a midway point. And now would be an ideal time to start looking for longs. So let's start looking. Let's do a different color to make this easier, and we'll map out the weekly time frame, the weekly structure. We'll do white, and you can see this was that recent bullish move, and again this broke structure. There was a pullback here. So now looking at this on a weekly time frame, this weekly leg, you can see that we are very much in a great discounted price range. Like if we were to look for longs here, this would be the best place. If logic is correct, logic is telling us that overall on the monthly we are going long. So now let's go on the weekly, and this is the weekly leg right here. And even on the weekly leg, we've been bullish. And so far, price in this weekly leg, we are in probably one of the most discounted price ranges. Now would be the best time to look for longs. And if it continues to break this and continues to go short, that's not a bad thing. It is what it is. At least you purchased the euro dollar at the most discounted price range in this leg. So it's the same thing. It will just go down to the 4 hour and then the 15 minute and then the 5 minute. So it's entirely up to you where you enter. Some people trade on the 1 hour, some people trade on the 15, 5 minute and 1 minute. Me personally, I take my executions on the 5 minute, and 15 minute is where I will look at structure to see, are we bullish, are we bearish, 15 minute and above. So what I advise you to do, what I suggest you do as an exercise, is look at multi-time frames, get used to it. Map out your highs and your lows. See where you are in that leg. See where you are in the monthly leg. In my monthly leg, I know in the euro dollar that we're sort of at equilibrium. So when I look at the weekly leg, I know that in this weekly range right here, that we are a great discounted price, and we should go long from here. So when I go on the daily and I look at it even more further, there's been a fair value gap that we filled, and you can see that price wanted to go bullish here, but something happened around here for it to just shoot up. So we know there's a lot of money here. We know that most likely what would happen is price is going to come back down here. These big hedge funds and banks are going to, take their second bunch of orders here and just continue to go off. So guys, this was the first lesson, using common sense and logic. If you already have a trading plan, take this concept and just use this alongside what you already know, and things will just make a lot more sense. And again, in the next few weeks and months, I know this lesson was very simple and very like it's just common sense, right? But it needs to be done. We need to lay down the foundations before I start introducing other concepts and for everything to fit together. So thank you guys for watching, and I'll catch you guys in the next one.